and welcome. Today, the focus is on Motilal Oswal Manufacturing Fund, which was launched earlier this month. To talk about it in detail, joining me is Akhil Chaturvedi, Executive Director and Chief Business Officer at Motilal Oswal AMC, and our in-house expert, Dhirendra Kumar. Welcome, gentlemen.
Thank you.
First up, Akhil, could you provide an overview of the Motilal Oswal Manufacturing Fund? What are its key objectives, investment strategy?
Yeah, sure. Thanks so much for this opportunity. So we have been very, very optimistic on manufacturing as a theme within our AMC. If you see across our portfolios, we have a very dominant positioning of manufacturing as a theme across our portfolios, whether it is mutual fund portfolios or the alternate portfolios. Now, why this has happened is because we practice this philosophy of high quality, high growth style of investing. And as we were assessing high growth opportunities, manufacturing was clearly looking very, very visible that this is one space where you have quality, obviously, but you also have various subsectors which were providing high growth opportunities, and therefore the opportunity is diversified across subsectors. So about 2 years back, we started building a position and very dominant, and therefore we thought that as the government's focus also is more on creating manufacturing capacities, efficiencies, export, and we have seen the continuity of the government. Therefore, we expect that the continuity of policies and reforms also would be there at least for next 5 years. And eventually, if India has to grow to doubling of economy in the next 5 years or 7 years, and even more as we go forward, manufacturing is essential. So I think this would be a very interesting theme. I don't call it a sector, I call this as a theme. It's a very diversified theme, very few exclusions, but you have a lot of opportunities within the manufacturing theme as a opportunity kind of a thing in the next couple of years. So we thought that this makes sense to have a dedicated thematic fund on this concept and give investors the choice to create a satellite positioning on this theme for next few years and benefit from the opportunity as it comes along.
Okay, Dhirendra, how do you see manufacturing sector evolving in India over the next decade, and what are the opportunities that you anticipate?
Well, I'm seeing a whole, I'm being a historian of mutual fund. I'm coming from the times of, 20 years ago, people were launching service sector fund. And, they have done well. That was, 2 decades of, dominance of services. And, 10 years, 9 years ago, for the first time, I saw the launch of, the Make in India campaign. That industrial wheels and, silhouette, launched by an ad agency, created by an ad agency. And that was the beginning of the Make in India campaign. And I did not expect that, something as dramatic as now we can, with the benefit of hindsight, we can see the beginning of production linked incentive. And, as they say that harder you work, luckier you get. So what we witnessed was the pandemic and the post-pandemic, the recovery and the realignment, supply chain realignment. And India has been an accidental beneficiary of all this. And that was the beginning of it. You can manufacture something, but unless there are takers. And pandemic actually gave us a very different degree. The realization that if we don't really revive our, manufacturing, we are in trouble. We are in, we will have difficulty. And now, the continuity of the government, the kind of long-term commitment and the strategic importance. Now we are beginning to see the results of some of the initiatives. And that is very confidence inspiring. Earlier, there used to be so much of cynicism around it. We had so many, so much of Deadpool, public sector struggling, not speeding ahead. Now we are witnessing, a very different kind of vibrant manufacturing sector getting revived. For years together, we have only thought that, we are a services economy, and, we will be creating Zomato, we will be creating Infosys, but, manufacturing, we just left, and now we see a complete turnaround. So services to manufacturing, I think this is a long drawn story. It is not a narrow theme. And there are a lot of things which will actually emerge which don't exist today.
So now if I have to take Dhirendra's point ahead, You see, broadly, 2/3 of our economy today is service sector, and 1/3 of our economy is manufacturing plus agriculture, which means that today 15% of our GDP comes from manufacturing, just about 15%. Now, if you compare to several economies which are manufacturing led, like China, like Taiwan, Indonesia, all of these countries are heavily dependent on manufacturing to GDP. They are all at about 25 to 35%. As a sector to the overall GDP, we are at 15%. But when they started their manufacturing cycle, the bull run of their manufacturing theme as a cycle, they all started with 9-10% as component to GDP, and they've gone up to 25 to 35%. We are at 15%. And with the way the current push is happening on the manufacturing, we feel that can we reach to, let's say, 20% or 22 or 25%, which itself could be a very big difference. I feel that maybe in the next 10-15 years, manufacturing could be 50%, and the service plus agriculture could be another 50%. I mean, that's the opportunity which is lying ahead. Of course, it's not happening in the next 1 to 3 years. It's going to take some time, but yes, it's playing out. Yeah.
All right. Now, Akhil, you mentioned that there are various subsectors. So, the fund, which subsectors do you find most promising, and the reason for that?
So there are a whole bunch of sectors. You can look at capex as a play. You can look at power as a play. You can look at autos, auto anchors, EVs within autos as a play. You can look at electronic manufacturing as a sub theme. So there are a variety of opportunities. I mean, but if you just have to, fortunately, we are big investors in manufacturing as a theme. So if I just take a cue from our own portfolios, you will find that power has been something which we have introduced about a year back, and within power we are trying to play the renewable power theme. It's looking pretty interesting, because if you see that governments, obviously to get manufacturing running, you need energy. And to be energy efficient, we need to move out from fossil fuel to renewable power. So if we feel that, or at least the government says that they want to double the capacity from, let's say, 400 gigawatt to 1,000 gigawatt, I think incremental growth will come in the renewable side, whether it's wind or it's solar. In fact, I was hearing one podcast, and interesting point, there are about 42 nuclear plants which are coming in the world. 23 out of them are coming in China, 8 are coming in India. So that power as a theme after almost 15 years, and Dhirendra would know, I mean, knows power which was playing out, remember, in 2006, 7, 8, and then it all went for a toss. Now it's coming back very strongly, and you have a few good businesses available here. EMS is something, again, electronic manufacturing is what we have played. Electronics, again, if you see, PLI as a incentive, of course, is given to this subsector, but electronics also is one of the highly imported item, which we want to convert into export item. So you know that Apple is now getting manufactured in India. We've done an export of $10 billion, likely to do $60 billion in the next 5 years. So this space, whether it is for computers, mobile phones, several other electronic components, all of this getting manufactured in India is creating opportunities in this space, which is EMS. So real estate, I mean, auto again is looking very good. I mean, if you just see in the last 1 year, for several years, Maruti has been selling about 1 million cars a year. I mean, last year they sold 2 million cars. So, auto players, and then of course you have the auto anchor. So that's another very interesting theme which we're playing. So these are some high growth sub themes within the overall manufacturing theme, which I feel makes sense. And you will find the representation within this portfolio as well.
You mentioned PLI, you mentioned Aatmanirbhar Bharat. So how do these government initiatives, like Make in India also, how do these schemes and initiatives impact your investment strategy?
See, our investment strategy will basically be to follow where the reforms are happening, right? Which way the government is taking this whole opportunity. Now, I think one example, if I have to give you, is defense. Now, again, defense was one of our big import item. For many years now, the current dispensation is talking about making India for all the defense equipments and all the defense items, etc. Right? So we are trying to now import technology from US, from Russia, and everybody is lapping up to India because we are the big buyers of defense items. So I think over a period of time we will start to make planes and guns and all kind of missiles, and not only for our own security, but this will become again a very big export opportunity. Some small fruits you have already seen. If you have read the papers, we have exported the BrahMos missile to Philippines, and they want some more missiles. We've exported guns to bullets to Germany. Armenia has been buying some equipments from us. So in a very small way, but we have started to manufacture defense related equipments, and now we are also looking at this as an export opportunity over a period of time. So this is one area. Second, of course, PLI, which is now given to almost 10-11 sectors. It's a big initiative or big incentive for private sector to think big, to set up capacities, and make us as self-reliant as possible, right, in this space of electronics. See, there are three big import items. One is oil, secondly is electronics, and third is defense. And in all these areas, we are taking several steps to become more and more Aatmanirbhar.
Fair enough. Now, can you explain what are the key criteria you use to select stocks for this fund?
So criteria remain the same as a fund house. We follow the QGLP principle. So quality, growth, longevity, price. These are the four frameworks which we use anyways to select stocks across sectors, which we anyways will use for this fund. But like I said, the overarching philosophy has been to focus on growth, relative growth to the index. So we have to always be very conscious that without compromising on quality, where can I get relatively high growth compared to the benchmark? And therefore this theme, I'll give you some more numbers on this. So like I said, that if in the next 5 years our economy doubles from $3.5 trillion to $7 trillion, right? Currently on a $3.5 trillion, $430 billion is manufacturing to GDP, as I told you, 15%. This is likely to go up 3 times to about $1.3 trillion. It's a 3x opportunity, right? And then within that, the export, which is currently $750 billion, out of which $250 billion is your IT exports, and the rest is all the merchandise export. This also is likely to double in the next 5 years, right? So this is a high growth theme, and you have the opportunity to invest in companies which can give higher earnings growth than the benchmark earnings growth. And that is where our skill sets are coming into play, and then we put the QGLP check. So do the quality check, growth check is done, and valuations, all of these things. In today's environment, I think the valuation check is very, very important. So how to play out in the current scenario from a 5-year kind of a viewpoint. So I mean, these are some of the things we are using to create this theme, and this is my first active thematic fund, I would say. First, otherwise we are participating through diversified funds. This is the first thematic fund we are doing ever since the AMC started.
All right. And what is the research process when evaluating potential investments in this sector?
So we have fund managers, we have sectoral experts who are experts in. So we have an expert who only focuses on manufacturing and defense as themes, right? So there is this QGLP, while it sounds very simple, quality, growth, longevity, price. Every time we assess thematic opportunities and then we look at stocks, there is a whole thesis which is written under the quality. What are the aspects, ROEs, ROAs? Then we look at growth. What has been the traditional growth, EPS growth? What is the growth outlook for next 1 year, next 2 years? Then we look at cash flows, DCF, and then finally we look at the valuation. So all bunch of things are put. So like Ramdoji says, every time you buy any company, you have to look at two things largely. You have to look at the narrative story of the company, and you have to look at the numbers, right? So this entire part, narrative and the numbers, are put together as part of the proposal, and then it goes into the IC. Investment committee comprises of Ramdoji and Pratik Agarwal, and then together as a team, decisions are made to pick up individual stocks.
How do current macroeconomic factors, how do they influence your investment decisions for the fund? like interest rate, global trade policy?
Yes. No, it does, definitely. While we are bottom-up investors focused more on companies and companies' fundamentals, but it's very important to always keep a check on how the macros are shaping up. So obviously, we are looking at our GDP growth, we are looking at the interest rate. So, I mean, if you have to see all of these numbers today, India is stacking up pretty nicely, right? So we are the fastest growing economic growth for last several years. We are actually beating all kinds of analysts and research agencies who have been making claims about 6%, 6.5%, and then we cross 7%. So the GDP is really doing extremely well. Inflation broadly has been in control. It's been in the comfortable band of RBI between 4 and 6%. Broadly, it's been in the range of 5%. So that's okay. For the last several months, I think almost a year and a half, we have not seen any interest rate hikes at least. There is more talks of interest rate cuts than actually now interest rate hikes. Fortunately, the inflation in US also is now reaching at closer to 2%, and there are talks about cuts out there. So essentially from manufacturing as a sector, because it's heavy industries, lower interest rates will always help private sector to add more capacities, right? So interest rates has a direct connection with how the capacities can be added. So all of this is looking positive today. So we are keeping a check on how the overall macros are shaping up. Then we look at the micro check, which is the earnings growth, and then finally, obviously, liquidity, etc. All of those things.
All right, Dhirendra, moving on to you. What is your outlook on the Indian manufacturing sector in the context of global economic trends?
I'm, just looking at, these are very early days. About 8-9 years back, I was looking at it with awe. Then I saw that, this is a very targeted, government incentive program. And I was apprehensive that will it really come about. Now we are witnessing that, okay, there are success stories. We had all the, cell phones, we were only importing, and now we are beginning to export. A good component of that. So there is now, the most promising thing that I witness on a macro basis, or, different states competing with each other to attract manufacturing capacity. And the kind of incentive being offered to create large scale manufacturing capacity. So now we are thinking, we are talking of, or you're witnessing capacities being built, which is not small scale. We are talking of, capacities which can absorb 1,000 people, 5,000 people, 10,000 people. You really have to, and now we have a supporting infrastructure. So I'm extremely optimistic unless something goes wrong. And of course, with this kind of manufacturing, there are inherent risk factors, which is, large capital outlays involved. Setting up the capacity, you borrow money, and things have been very favorable. But things, little bit of change in the context and, complexion of the economic environment and the ecosystem. But, the ecosystem is evolving. Initially, we had this apprehension, the cynicism, then it is beginning. So I think it is still early days. But, as Akhil was saying that, for the first time when we export our defense output or production, it will be quite a feat in a sense that, for historically, we have only imported. Now, think of, the speed at which things have happened as compared to the way it is happening right now. Reason to be very optimistic and be watchful for all the risk. And that is why, the fund manager should be, the role of a fund manager is critical.
I mean, Dhirendra always will bring up some interesting points. And if I have to add, I'll tell you, as managers, at least at Motilal, I can tell you, whenever we are looking at investing opportunities, we are always the first thing we try to look at is what is the long-term opportunity size? How big can industry become, and within that, so what are going to be your winning categories, and then we look at category winners. I'll give you some small numbers. I was just going through my deck. Now, over the next 10 years, our current semiconductors, which is a $44 billion industry, there's a potential to go up 2.8 times to $117 billion. Our EMS, which I spoke about, electronic manufacturing, $101 billion can go up to $500 billion. EVs and batteries, just a mere $4 billion industry, it can go up to $48 billion. So I can give you a bunch of these sub ideas where the opportunity is huge, and like Dhirendra mentioned, these are very early days. You are hearing in pockets, small announcements here and there, but at least we are going in the right direction, and we have to go in this direction. There's no way that we if we don't go in that direction, obviously we are going to suffer.
But Akhil, manufacturing is often a cyclical sector. How do you plan to manage the risks associated with investing in this sector? There can be economic downturns or sector specific challenges. How do you plan to?
So I clarified on that point that I wouldn't call this as a sector or a cyclical sector. Like I said, it's manufacturing as a theme. It's a very broad-based, diversified theme. The only exclusion I can think of broadly is financials, BFSI, and IT. Right, so you just remove these two sectors. You have broadly everything. Even pharma is manufacturing, auto is also manufacturing, consumer durable is also manufacturing. Everything is so it's much more diversified compared to some of the other themes. Like we did a defense sector index fund. That's like that's a sector. So there obviously the challenges could be different, and one needs to really time it well. Having said so, yes, this is a theme. It is a theme, and it will play to the theme. Whenever you play themes and whenever you play sectors, you have to be very, very sure that what you are expecting from that theme or the sector over the next 3 to 5 years. And if the narrative looks good, the storyline is good, and expectations are good, you have to come at the right time, and equally you have to go also at the right time. Right, so you have to play these opportunities as satellite opportunities. Come, make money, enjoy the opportunity, and at some stage also book your profits. Right, so I would say that. Of course, one, as fund managers, we have to be very, very cautious as we create the portfolio. We have to ensure that we go in the right subsectors, right stocks. We have to ensure margin of safety. All of those things we will do at our end for sure. But yes, if there is an economic downturn, there is some kind of a headwind, global headwinds, local headwinds, these kind of funds are likely to go for higher volatility, higher drawdowns, and then one needs to wait it out. I mean, if at least the long-term trend looks good, then one has to go through those headwinds, and then as you come out of it, obviously the normal compounding will work. Yeah, maybe Dhirendra can add some more points. That will be more interesting.
This is a theme which is getting very close to the diversified equity fund. Think of it in terms of exclusion. What is excluded out of this? As he said, that IT services. Look at banking, which is a very sizable thing, because look at banking in terms of the broad indices. It is about 30-33% of the total thing. Large cap indices I'm referring to. And if you look at modern services industry, things like quasi financial services, or something like Zomato, or many new things coming up, it may not get factored here. But rest of it, I would say that it is 2/3 of it is diversified, and it will have all the cyclicality. And today, the manufacturing, I have been witness to the death of manufacturing sector in India in the 90s, and it was a steady decline. In fact, some of the survivors are, they still are, they exist, or they have survived with dignity, like Bajaj Auto. But rest of the things, what I witnessed in the 90s, they have all disappeared. Because today, the growth from here for the manufacturing, given that incentive, as compared to the 90s, was very different. They were all in competitive businesses, sheltered by the licenses, and they all died once they were exposed to the competition. Today, the survivors are competitive businesses, and once they are given the incentive, once they are, once they have the government works towards all, moving all the speed breakers to their existence, survival, prosperity, I think it will be a different thing. Indian investors or Indian industry has not been used to this attitude or this temperament, where the government is working towards developing a logo for Make in India, and getting. And bureaucrats are assigned that you look after this pharma bulk drug, you look after this. What can be and it is actually, this PLI is quite an innovation in terms of government policy. Earlier, it used to be give a land, this thing, that thing, manufacture something, tax incentive. It was over the blanket. This is now, government is very sure that it is in the business of incentivizing thing which creates capacity and generates employment. That can come, and then somebody gets a direct, it's almost like a direct benefit to the industry for setting up something which achieves a regulatory or, say, the governance role. And with that, I'm very optimistic that it is not free for all. It is not somebody running away with government's money given that opportunity. Earlier, it's subsidies and this and that and everything used to be like that. This is very focused, targeted, and that is why I'm extremely optimistic about this.
So keep in mind, Ruchira, that out of the top 500 companies, Nifty 500 as index, over 275 companies or around that number are all manufacturing related businesses. So it's a very large component of the top 500 companies. So it's very, very diversified. I mean, let's not confuse, because when I do roadshows, this question almost it comes up every time that it's sectoral and it's cyclical and all that stuff. And I keep clarifying that it's very diversified, it's very broad based, the opportunities are huge. There are certain near-term challenges for sure, and one needs to keep that in mind, but it's very broad based.
All right. Any plans to expand the fund scope to include international manufacturing companies, or will it remain focused on Indian companies?
Open, we have a limit of up to 30% to go outside of India. But the challenges currently is that we don't have any limits to put any money outside India. So that's on pause for now. But across our funds, we have kept this option available. And at some stage when we have the limits, we are open actually.
Okay. And last question. What future trends or innovations in the manufacturing sector are you excited about, and how do you plan to incorporate them in the fund strategy?
I think what we are seeing is around, let's say, the EV space is looking very interesting from technology innovation perspective. I think that's one space which is coming up. It's going to take some time, but that's one space clearly. Power again, we are seeing a lot of work which is happening on the power side. So there again some technology. So we have to see where AI is getting used. I mean, auto hangs. Cars are no longer cars. Nowadays if the new cars are released, the body doesn't change. It's only the software which is changing, right? So whichever sector, then I'm pretty surprised to see that a lot of manufacturing companies are using tech-enabled services, products, artificial intelligence, cloud computing. All of these things, these same traditional old conventional businesses are using to create more efficiencies, scale, reduce cost, and eventually give a great customer experience. So it's happening everywhere. Innovation is happening across.
I want to ask a last question to you, Akhil. That
yes, sir.
How fearful are your fund manager about the valuation today as you are launching this, and you'll end up with sizable money to begin with, deployment of that?
We are conscious of the current situation. Like I said some time back, we will take our own time to build the portfolio. We'll take it easy. We will be very conscious in terms of every opportunity we are buying, both from the growth and the valuation perspective. So won't be in a hurry. We'll take our own sweet time. As we speak, for a certain size, we have a model portfolio which is already ready. So it's not that we don't have opportunities immediately. I don't expect too large inflows. I think it's going to be a contained inflow and should be managed well. I think anywhere between 750 to 1,000 crores kind of flow should be manageable, should not be an issue. But we are very, very conscious on your question for sure.
All right. With that, time for us to wrap up this chat. Thank you for taking the time and speaking with us.
Thank you so much.
Thank you.
Thank you, sir.